Well, to be honest, you never sell your Bitcoin, but I expect that my children someday will sell everything, for sure. My name is Martin Leinweber. I am working for Market Vector Indexes in Frankfurt, Germany. I'm running our digital asset research and strategy, and I'm also the co-author of the book Mastering Crypto Assets. I can't highlight enough that Bitcoin, and also if you look at other crypto assets, but let's stick to Bitcoin. If you look at the evolution over time, the volatility, if you look at the rolling volatility here, it started basically very similar to an early small cap tech stock. And so it makes it easier to have a strategic asset allocation, be it via the ETFs or direct investments via crypto exchanges. But this is just helping and also a proof that this asset class is maturing. And interestingly, you also see the same profile for younger coins. Yeah, it's the same is true for Ethereum. Yeah, volatility is coming down, and you have that every cycle. Yeah, you have a new coin with outsized volatility. It's coming down, and I think that's the good message here for investors. Don't be afraid of volatility. If you add Bitcoin or crypto to your portfolio, it does it magic. It's magic via diversification. So Bitcoin, due to this, its nature of having these explosions to the upside and its beneficial correlation profile, it really enhances your overall portfolio return. While at the same time, if you look at the volatility, it's not increasing in the same linear way. So to give you an example, yeah, you don't have to add a ton of crypto to your portfolio to have a positive impact. You can start small, and I also think you should always start small with this new asset class. So for example, if you just add 2% Bitcoin to your portfolio, what does that change to your portfolio ratios? Yeah. So as you can imagine, it increases your annualized return by 30%, which is good. It increases your Sharpe ratio, your risk-adjusted return by 25%, which is also good. You want that. But at the same time, volatility or drawdown, for example, just increases between 2 or 3%. So you really see it has a positive impact in a linear way on the returns, while if you allocate small and slowly, it's a non-linear effect on volatility. And that's what you like to have. But keep in mind, the most important thing is that you do your rebalancing. So no matter if you do it on a quarterly, semi-annual, or annual basis, it's important that you stick to your original proportions. Yeah. So let's assume you have a 60-40 portfolio with a 2% Bitcoin allocation, and Bitcoin increases to a 10% allocation. You should move it back to 2%, because otherwise it starts dominating your portfolio, and then also it starts dominating your volatility and drawdowns. And that's not what you want, because people then start stupid things, and you want to avoid that. With the increase in institutional adoption we've seen so far, and new financial products coming to the market in the form of exchange-traded products, and I mean the ETFs in the US or the ETNs in Europe, for example, or new derivatives, you just improved the market structure for institutional investors. And with this better market structure, it's logical that more money is flowing into this asset class. And I think the Bitcoin ETF specifically has proven that this is the case. So people built crypto into their strategic asset allocation. So you have more and more model portfolios, which serve as a guideline how to add crypto, and especially how much you should add to crypto. Also, you have seen some risk management tools popping up, which are also essential, of course, for the more professional investors. And at the end of the day, we also have seen more benchmarks and indexes popping up, whether it's for single token products, but also for broader baskets, sectors, staking. And at the end of the day, this kind of standardization helps to bring institutional investors to the table, because we need that. We need a standard. And so overall, it just leads, it's like an avalanche. It's getting bigger over time. And so is it now with the institutional adoption. I think there's no way back. And we will see more products and a better market infrastructure and more liquidity going forward. Well, while Bitcoin is still the largest coin in the crypto market with over $1 trillion in market cap, it's important to note that the Bitcoin dominance has fallen over time. So what is Bitcoin dominance? That's basically the market cap of Bitcoin divided by the total crypto market cap. So as you can imagine, when Bitcoin started, we had a Bitcoin dominance of 100%. Then we had a few forks of Bitcoin. We had Ethereum. They have a certain market cap. So Bitcoin dominance decreased. And now we are roughly speaking at 58% or so. Now what's eye-catching is that there's also a cyclical component to the dominance. So depending on the market cycle, whether we are in a bull or bear market, this dominance is also breathing. So in a bear market, usually Bitcoin dominance increases because Bitcoin is the lowest perceived risk coin. And while we have these brutal altcoin rallies, normally the Bitcoin dominance is falling. For investors, I think, what does that mean? If we say that Bitcoin is a store of value, that should, of course, have a lower potential market cap than productive applications, which are built on top of blockchains. Yeah, for example, think of DeFi, decentralized exchanges, lending. You can also say decentralized identity, AI token, all that stuff should have a larger value than just one coin. And so it's really important, if you invest in that space, you can start with Bitcoin, but I think it makes sense to think about what else is reasonable to invest. Yeah, you have Ethereum, and we also have an Ethereum ETF in the US. But for example, in Europe, we have broader baskets, broader indexes, which enable you to buy the crypto market return. Yeah, and I think that's, for allocators especially, a very good vehicle to add crypto exposure to the portfolio, because you don't have to worry about token coin selection. And so these are some rules you have to keep in mind. I hope you found this informative. If you want to learn more about crypto assets and how to integrate it, grab the book or visit marketvector.com.